my beautiful wife, Alba. Thanks for being on the show.
You're welcome.
And today we're going to talk about real estate. And I'm excited to talk about this because really that's how I started my journey with personal development and self-improvement, because I went to some real estate training, which got me involved in learning how to communicate better, develop rapport, and that's how I got turned on to Tony Robbins, and we both end up going and walking the fire. So real estate has, and it's always been good to us, right?
Yes, it has. It's been good to me.
Yeah, and when did you start investing in real estate?
Well, my first house I bought was when I was 21 years old. So at that time, I wasn't into real estate. I just wanted to buy a home.
Right.
That was with my previous husband. So I was always into finances. I worked in the bank. So to me, I didn't think that was out of the ordinary to buy a house at 21. But now that I think back, there aren't too many people that are able to buy a house at 21 years old right now.
Yeah. And what were the interest rates back when you first bought a house?
Oh, they were high. I believe we were able to get like a 14% interest, and that was because we had really good credit, or we were just, but it was high, 14.
Yeah, I think my first house was 14 or 15.
Yeah, I think we bought it in 1980. Yeah. What was it? 85? Yeah. 1985, yes.
Yeah, and then what'd you end up selling that house for?
Well, let's see. We bought it at $90,000 and we sold it at $175,000, which it doubled. Let's see. We sold it in 1994. So it 10 years, like it usually says, the market says 8 to 12 years.
Yeah.
That's when you should keep your house and because it's going to go up within 10 years. So yeah, I think every house that I've bought so far has doubled.
Yeah. The only regrets I have in real estate is not having kept houses, just because they've either tripled or quadrupled in value over the years.
Oh, okay. I guess I don't know if I just have the right timing, or I just know when the timing's right to sell the house.
Yeah. Have you done a lot of research before you bought houses, or?
No, I don't do research.
Yeah, you just went with...
Just go with my gut and what I know already. I already know a lot of facts about banking, so it's very, interest rates are, it's easy to figure out what the interest rates is on a house and how much you have to put down, and you have to have good credit, so that's easy. Knowing that your credit is a big, I guess, important thing about when you buy a house. And a lot of people don't know that their credit score makes a big difference, because that's when they decide whether your interest rates are going to be lower, and also you can qualify too.
Right.
But also it's based on your interest rate too. So if you have good credit score, you're going to be lower interest rates.
Definitely. Great.
I remember buying my own house on my own, which I was really proud of myself. I went through a divorce, and then I had to start over again. So within a year, I was able to save up enough money to put a down payment down on a home, brand new house, and I qualified, and so that was very exciting. I believe that was in 1996. Yeah. And that house doubled, because we sold it at that time we got married.
Yeah.
And then we sold that house, and it doubled. I think we bought it at $150. I bought it at $150, and I believe we sold it at $300,000. And then we just, whatever equity we make, we just roll it over and put it into the next home, which we bought a $500,000 home.
Yeah.
So.
Which we end up selling for $730,000.
Yes, and it would have doubled, because if I would have waited another 2 more years, actually just a year, because we bought that in 2004.
Yeah.
And then we sold it in 2020. Yes. And the
Yeah.
year later, it went to $1 million.
$1 million. I know. It finally went to $1 million.
Finally went to $1 million the year afterwards. So
Yeah.
can you imagine? It went up. We sold it for $735, and it went up another $270,000 within 1 year. So that's. But it doesn't matter because we moved to Florida, and we were happy to move to Florida.
Absolutely. And we should say, I guess we should say that, we're just talking about our experiences in real estate. Before you make such a big financial effort, you should consult your accountants and your agents. And
Of course.
yeah,
Of course, you should always have an agent. Don't ever try to
yeah,
buy or sell a house yourself, because you really need. It's like having legal advice, an attorney.
yeah.
So definitely get an agent, and they'll help you if you can't qualify. They'll tell you what to do, what you need to do to qualify. They'll explain to you about the credit score. How if you have a lot of credit cards, you need to start paying those off, because that's another thing they look at too. Is if you have a lot of bills, a lot of credit card charges, they'll look at that. Yeah.
Yeah, and like me in California, I got my real estate exam, my real estate salesperson license, and then you got yours, and so.
Yes, I was. After I retired, I dabbled in several things, but I decided, you know what? Since I like investment, I think I know a little bit of real estate, so I figured, why don't I just become a real estate agent? And I was sort of very proud of myself because I passed the test the very first time. I did not know that many people who take the California license exam don't pass it the first time. It's very common for them to take it several times before they pass it.
Yeah, and then when we went to Florida, we bought 2 investment properties that were rentals.
Yes.
I know, and a lot of our friends who have pensions and whatnot, they have a large chunk of money they've left in investment accounts. But I like to have, for the money, I mean, you have a piece of property you can put your hands on. It just makes a big difference to me, I think.
Yes, to me, absolutely. Because if you're investing in stocks, you really have to know what.
You got to pay attention to the stock market to know the stocks, and then it's only on paper, right? I mean, you have nothing to look at and touch and feel. I don't know, real estate, you can actually see a building and property. And
then you have to pay. Obviously, you have to pay somebody to do your investment. So with real estate, if you invest in real estate, you end up getting, we have 2 rental properties. We bought one, actually 3 months after we bought our beach home in Florida. I asked you, hey, maybe we should buy an investment property. We have some money left over from our sale of the house in California. So we found a really great townhome for $205,000, and we were able to put $100,000 down, and the payments were really low. So and then we rented it out, and we were making like $300 every month, at least $300 every month. Then the following year, I raised it another $100. So every year, I went $300. I made $400 every month. And then
what did it go up to?
Oh, this year, if I could have rented it for, let's see, I started at $1,200, and I had it rented for $1,700, but I could have gone for more. But a lot of people don't have, even though I could rent it out for $1,900. I decided to rent out to $1,700. Really nice lady that I met from Brazil. So
the rent we got went from $1,200 to $1,700. Could have been higher, over $500 more a month.
That's $700. Yes.
That is income you're making from the property, totally separate than the equity you're getting, and also the gain in value that the property went up to. So you almost get a 3-fold income from that money.
Correct. And again, I decided, you know what? We have 2 rental properties, and it was just getting a little bit too much to handle this one because it's a little bit further away, and it seemed like there was always something going on with this townhome. So we decided to put it on the market, and my real estate agent says, "Oh, well, we can put it for 315,000." So if we do get it for 315, we already made 100%.
100% return is not a bad return after 3 years. Yeah.
Less than 3 years.
Less than 3 years. And my feeling is your money's in these investment accounts. I guess if they're a retirement account, it's different. But otherwise, if your 200 becomes 400,000, eventually you're gonna have to pay tax on that.
Correct.
Whereas if you have a rental property and that $200 property becomes a $400,000 property, and now we're learning about the
1031 exchange.
So then you can take that money, and as long as you don't, I guess what we learned was, as long as you don't take possession of that money and you reinvest it into an equal or greater value property, you avoid the tax on that property. Which, of course, if you're going up in property, then you're going to get more rent or higher rent. Maybe you're going to a multiple unit. And that's an ongoing income that you keep getting from your investment. I don't think there's anything better than that.
No, there isn't, because if you sell your rental property and you do not reinvest it, you're going to pay like almost 38% of your sale. So
right.
Let's say we sold it for 300,000, that'll be 90,000 that it's just gone.
Just gone between taxes and all sorts of capital gains tax plus the other taxes, and it doesn't make sense really to do it that way.
So it's always good to just if you do sell it, reinvest it. Yeah. Because you don't know, it's deferred, and you only pay taxes once you sell it, and hopefully we will continue having this and pass it on to our children, and they will decide what they want to do with it.
Yeah, ultimately, you could actually never pay taxes on that money, and it keeps making money for you, and they keep giving you a check every month, which is great.
Which is great because we like to travel, and then I can use that money for our travel expenses.
That's right. I heard this from somebody. It made sense to me. The bank will not give you a loan to buy their own stock. So B of A will not give you money. Can I borrow $200,000 to buy B of A stock? They won't do it. No. But they'll give you $200,000 to buy real estate. That should be a key as to why that's such a great investment. Banks are always willing to take a risk on real estate because they're happy if you don't pay, they're going to take that real estate. Correct.
And there's so many different ways to buy houses. I don't know everything, but there's something called asset. You can get a loan. I don't know. It's called an asset type of loan.
It's an appreciating asset is what it is. I mean, it's not a liability only if you live in it. But if it's a money-making income property, it's considered an asset. So,
Correct. And you could start with 2, and then all of a sudden 3, 4. Then maybe get an apartment complex, and it just keeps doubling, tripling, quadrupling every year.
Get multiple doors, I hear, is a better way to go if you can do it. Now, what is it? You can, is it up to 4 units in you could still qualify as a residential rent zone?
4 or less.
4 or less is a residential.
Yes.
So you don't have to get a commercial
loan.
After
4, it's a commercial.
Commercial.
Yeah.
That's great. But if you have 4 doors, then you're only, if one person's, if you have one vacant, then you still have
3.
Yeah.
Yes.
Exactly. Where if you have a house with 1 door, if it's vacant, 0 money's coming in, you're 100%
correct
vacant. So it seems like the better investment to have multiple doors if you can do it.
Right. I think my goal would be, or our goal would be, maybe we can get an apartment complex, but I definitely would get a manager.
Yeah, definitely.
Because I do everything. I wear all hats. I'm the manager, landlord. I call for the repairs, for everything.
It's really a full-time job, and then
it is.
Especially if you're just, maybe you wouldn't be costing that much. If you only have 4 units, you probably wouldn't be costing you that much more to have a manager as if you would have for 1 unit. So,
correct. Yeah. Right now, it's like I rather just do this myself because
it's one property.
Usually, you pay 10%. It's like I just don't feel like giving 10%.
No. Yeah.
Right now, but maybe when I get an apartment, yes. Yeah. Definitely.
And then we had 1 unit. You had 1 property that you made into a Airbnb. How did that go?
Oh, yes. Did that for my first time, and it went really well. I'm surprised. I put it, let's see, since we live in Florida, a lot of, they call it snowbirds, people that come from the back east, up north, they vacation between October to April. So I think I made probably like $3,000 a month. So if I would have rented it out, I could have rented for $2,100. So you actually make more money having an Airbnb.
Yeah. Gotcha. Yeah. So then it was kind of fun setting it up because
Yes, it was.
Yeah. And there's a lot of YouTube videos on how to do it, how to decorate it, and then Airbnb really helps you a lot as far as getting your first renters and making sure they're not crazy partiers and whatnot.
Right. I did a lot of research because I got audiobooks and I just listened to it over and over again. It was about Airbnb. So I learned a lot from that, and I knew exactly what to do. Especially, I didn't want to get anybody that was a riffraff or, it's going to destroy the property. So every single one that I got never had an issue, never damaged anything. So I guess that really helped out the audiobook on the Airbnb. I wish I had the author, but maybe later I'll put it on.
Yeah, if we find out, we'll put the links in the,
it's a good
description. It's actually, the Airbnb is a little bit like Lyft and Uber, because the people that are renting it, they get rated too. So
yes,
they kind of have an incentive if they continue, because a lot of people just rent when they do Airbnbs wherever they travel around the world, and so if they have bad ratings, they're going to not be able to rent properties.
Correct. And I remember my first renter was in December, Christmas, and it was a guy from Germany. I was like, oh my God, I got somebody from across the country, Germany to rent it for a week. So that was cool.
I think people would rather stay in a house if they can, if they travel.
Yes. And a lot of times you don't have to clean. A lot of times they don't use the kitchen, so it's very easy to clean. And I ended up paying somebody to clean it up, because at first I was doing it, it was like too much.
Yeah.
So for $100, they'll clean it up.
And really, the cleaning fee is kind of in the price they pay, so you might as well use it to pay a cleaning person.
Yep.
Yeah.
You just put it in there, and you don't have to worry about it. They already know that they're going to be paying $120 for the cleaning fee.
Yeah, we should have paid you for the cleaning since it was in the contract, right? Yeah.
I know. I paid myself.
Yeah. Oh, good.
Several times over.
Okay. Very good. Do you have any desire to get your real estate license in Florida?
Well, let's see. 2 years ago, I did. I was thinking of, I got my California license, but I moved to Florida. I guess it's time to get my Florida license.
Yeah.
So I did procrastinate a little too much. I took the classes, I passed it, but then I had to take the state exam, and I believe you have to do it within 2 years. Otherwise, you have to take the week class again. I think
you have time.
I do, and right now I like just doing the investment, and I think I know pretty much of real estate, and I like the investment more than I think I like the selling of houses.
There's two schools of thought. A lot of investors, they don't even get their license because it's worth the 6% or whatever they pay for them to take care of the transaction, and they make the money on the investment of the property. And sometimes they're, if they make a smart choice in their investment, they've already made their equity on the purchase, which more than outweighs the price of the realtor to do the transaction.
Correct. Yeah, but it's good to know. It's I'm glad I took the classes, and I'm glad I passed my real estate in California, because it's when you're talking to a real estate agent, you will know what he's talking about or she's talking about.
Yeah.
So it is a good. You don't have to, but it's good to have.
It's good to know the language and what their agents are talking about when they're talking about fees, or especially both Florida and California. I guess because of, we know of California from past fraud and bad transactions. All these laws have come into place, which kind of makes it it can be a complicated transaction just because everything's been meant to correct a past.
Yes. And I'm glad about that, because when we first bought our house when I was 21, it was the same way.
Yeah.
There was like very, very rigid. You have to have really good credit. There was no hanky-panky going around with the banks, being whatever, fraudulent.
Yeah. It protects the buyer and the seller to make sure that the buyer is, where are the funds coming from? Do they have the money to pay? And,
correct. And I take about, not the banks, I'm talking about the people that were the loan.
The loan.
There's banks.
Loan officers.
Loan officers. That were. not doing the right thing.
Correct. And I'm glad we avoided the 2008. I know we had people coming over. Oh, you should do this, and you should,
Oh yeah, people were trying to. You can refinance your house, and you can get a lot of equity because you have a lot of equity in the house. And then the variable. I go, no, do not ever get a variable loan.
Yeah,
never.
No.
Always get it fixed.
Yeah.
I started when I was 21, and it's got me where I'm at right now.
Yeah. Because if you can afford that payment, then your income stays the same or goes up, or maybe it stays the same. You already know what your payment's going to be, and then even if your house goes down to zero value, you still have the money to make your mortgage until it turns around again.
Correct. A lot of people made a mistake thinking, oh well, I'm going to get a variable. It's like 1%, and then later on it went up to 10%, and now their house is upside down. They owe more than.
They thought in 5 years, I'll just refinance, and no, but of course, and in 5 years the houses went to bingo.
2008 happened, and people foreclosed. It was bad.
That was those shady deals where I couldn't believe
that was a lot of shady deals.
All these people were telling me, how are you buying this multi-million-dollar? Oh, it's stated income. They don't verify anything. You just tell them what you earn. What?
That's crazy.
It seemed crazy to me, and it didn't come out till later how crazy it was.
Oh yeah, and I do remember, because I work for the sheriff's department doing backgrounds, and one of the things is we check credit reports, and also if they own a house and foreclosures, and all these people were telling me about their foreclosure. It was like around 2008. Everybody was foreclosing. I said, it's like, what's going on? And they were actually telling me how they didn't have to qualify. And in fact, I got some people who actually work for, I think it was Countrywide, and they told me the stuff they did too was not good. So
I guess the government or Fannie Mae was buying up their loans, right? So there was something where they knew they were going to sell those loans, so they didn't need to verify it, I guess. Or
I don't know.
Yeah,
I don't know.
But it was a shady deal. I'm glad we didn't fall. We didn't variable. No, we're not touching that. Yeah.
Well, I think I learned that from when I was younger.
But I remember we had somebody come to the house and they were like, well, you should do this.
Oh, yeah. But since I was a young, in my 20s, I already knew not to get a variable.
Yeah.
I already knew that fixed.
Yeah.
Even when we bought our car, it's just everything, just get a fixed rate.
Right.
Don't ever get a variable.
Don't get a variable.
All
this is our advice for you. In our experience, a variable is not good. Yeah.
No, because I heard a lot of people who got variables and they got screwed.
Yes. All right. Very good. Well, I think we've covered our real estate. Can you think of anything else we should share with people about our real estate experiences?
No, but we are in the process of selling our property, and we did look into the 1031 because at first we thought we'd just sell it and get the equity, but then when we realized, oh my God, it's going to be 30%, that we're going to have to. So I said, why don't we look for some properties? And so we got all the information from my agent. We talked to the person that works for the 1031 exchange, and he was very informative. I learned a lot more than I knew.
I always thought, you just have to reinvest the money and then you avoid the tax. But no, you really have to have they're an intermediary. They're like
it's a savings. It's like a savings bank. They're like
they're almost like an escrow account for that money.
Yes,
so as long as you don't touch it,
correct.
And then they kind of keep track of the sale of the initial property and the investment in the next one.
Right.
And then it's a pretty nominal fee compared to the taxes you would pay on that money.
Right. I think the fee is $1,500, and they help you with the sale and also the buying of the property.
Yeah.
What else? I was going to say something about the 1031 exchange. And you also have, from the time of the contract, whenever your property is under contract and the sale, the end of the sale of property, the end of the contract, what do you call it? I can't think right now. Anyways, it's 120 days. So that's 6 months that you have from when you close to find another property.
So do you get the 120 days just to locate the property? I know there was a difference.
Well, no, it's got to be located within those 120 days.
But you had a certain amount of time to locate a property too, I think.
Well, they give you I think there's like a 45 day that as soon as you under
Close.
contract and they know
Yeah.
the closing date, now you have from that closing date, you have 45 days to have
To locate,
You have to
yeah.
at least have 3 properties already listed. They don't have to be under contract, but at least they have to know that you're
You've
looking
located,
and
yeah.
you located like
And
3
you gotta
properties.
provide addresses and probably whatever.
So you
yeah.
have 3 but
Yeah.
that's easy to do. You just put your 3
Yeah.
properties, even if you not in the county, you just put the ones that you are
Yeah.
looking at, and but then you still have 120 days.
And then you have it's 180 days to close on the next one.
Oh wait,
6 months, so at 30, 69,
6
180.
months. Did it say 180?
I think 180.
Oh, you're right. I take it back. It was
Yeah.
I can't do my math. 180
yeah.
days. Yeah, it's 180 days. And if you go over the 180 days, then it's over. You
It's over.
cannot.
You can't avoid the tax.
You can't avoid the taxes, and then so you
Yeah.
got to make sure that you do not go
Yeah.
over the 180 days when you find that.
And the
House.
only other thing, it has to be of equal or greater value than the one you sold.
Correct.
Yeah.
Yes.
So that's going to be good, though. Then,
Yeah.
And you don't pay tax on that money.
I know.
That's a great deal, the 1031. Yeah. So that's going to be a good deal. So, our suggestion is real estate is a great investment. You can really do well. I don't know anybody who's really done poorly except maybe in 2008 with real estate. And it goes up and down.
No.
Yeah.
Stay tuned because we'll let you know what happens
Yeah.
with that house.
Let's do a follow-up.
With the townhome.
Yeah, we'll do a follow-up on this session. But thanks for being my guest today and sharing our real estate information. It's just kind of how I get involved in personal growth and self-improvement. And then, and I, like you, I just love investing in real estate. I love everything about it. Just seeing properties and making
I
the
do
purchase.
too.
Yeah.
And the other thing is I get to find my tenants.
Yeah, you're
which
good
I
at that.
love to
yeah.
do. I love to socialize. I love to. I don't even have to hire anybody to do a background
Yeah.
because I already know what to ask them.
Yeah, because you've done backgrounds with the sheriff's department, so
Yes.
you do your own backgrounds.
I
and
do
you
my
verify.
own backgrounds, and I know right away when I see them too.
Yeah.
Sometimes I don't even need to have stuff on paperwork. I
Yeah.
just ask them questions, and I kind of know so far.
Yeah.
I've had 3 and
You've been
3
perfect.
tenants, and not everyone paid cash on time.
You're 100% so far.
100% so far.
Batting 100 with our tenants.
Yes.
Can't beat that. There's a lot of nightmare stories, but if you
Yes.
do your due diligence, you're going to be in the percentage that says you're not going to have anything bad happen.
Yes, and that might be our next
Our next episode.
podcast would be on how to rent houses, how to be
That's
a good
idea.
landlord,
Yeah.
how to find good tenants.
Let's do that on the next one.
Sounds like a plan.
Great. All right. That's it for this episode of the Cliff Yates Show. My favorite guest, my lovely wife. Thank you, everybody. And if you haven't already subscribed on the YouTube channel and you're watching, subscribe to the YouTube channel. And if you're listening on one of the podcast platforms, subscribe to the channel. Leave us a comment. We like it.
Yes, please.
All right. That's it.